Yes, hello, Jonathan Ruiz, your accounting coach, survival tips. So again, I'm back for another financial accounting and reporting lesson, which is bonds. So this is part of the liability. Okay. So moving on, our agenda is as I'm saying. So we are going to discuss the definition of bonds and measurement, and I'm going to give an example of a problem. Okay, so let's move on. So what is bonds? Okay, it is a formal unconditional promise made under seal. Okay, so meaning there is a promise. Okay, and what is that promise? To pay a sum of money at determinable future date, to make periodic interest payment at stated rate until the principal sum is paid. Okay, in simple language, a bond is a contract of debt whereby one party called the issuer borrows funds from another party called the investor. Okay, bakit ba ginagawa ito? Kasi yung corporation or the government, no, pwede mag-issue yan ng bonds to get a large sum amount of money to be used for expansion, to be used for project, no? So, ginagamit yan to raise funds. So, instead of issuance of shares, they issue bonds. Okay? And actually, since this is a debt, you need to repay it. Okay? And with interest. Of course, the investing public will not give you the money unless they are going to have returns on it. Okay? So instead of return on investment, you have return on the bonds itself, the interest payments. Okay? So that is bonds. So actually, there are types of bonds. We have term bonds, serial bonds. Okay, so when you say term bonds, then it's a single date of maturity. Serial bonds, there is a series of maturity dates instead of single one. And what are the features of bond issue? Okay, so there is a bond indenture or deed of trust is the documents in which it shows the detail of terms of the loan. Okay, there is a rights, duties of the borrower and other parties to the contract. Of course, you have a bond certificates. Like in the equity, you have a stock certificates here, you are going to have bond certificates. So each bond certificates represents a portion of total loan, okay? Usually, the minimum denomination used in the business is 1,000. But smaller denominations may be issued also. Okay, so if property is pledged as security for the loan, a trustee is named to hold title to the property serving as a security. Kasi meron tinatawag ding bonds na mortgage bonds or collateral trust bonds, okay, or debenture bonds. So these are, okay, the bonds and collateral bonds, they are secured bonds, and their debenture bonds is unsecured bonds, okay? So a bank or trust entity is usually appointed as registrar or disbursing agent. So the bank or an investment institution is the underwriter, okay, or the agent. Okay, what about initial measurement of bonds payable? So in PFRS 9, paragraph 5.1.1 provides that bonds payable not designated at fair value through profit or loss shall be measured initially at fair value. Okay, so it's always initially measured at the fair value minus the transaction costs that are directly attributable to the issue of the bonds payable. So yung transaction cost, this is to be less. This is outright expense actually. So the fair value of the bonds is equal to the present value of the future cash payments to settle the bond liability. Bond issue cost shall be deducted from the fair value, and this will be the measurement, the initial measurement. Okay? So dito na papasok yung calculations ng present value actually, since this is involves future cash payments to settle the bond liability. So as for now, I guess you already know how to calculate present value using the basic calculator. There is a lesson about that. You can browse the videos on my channel. Okay, so the fair value of the bonds payable is the same as the issue price or net proceeds from the issue of the bonds, excluding accrued interest. Okay, now subsequent measurement of bonds payable. So in PFRS 5, PFRS 9, paragraph 5.3.1, so provides that after initial recognition, bonds payable shall be measured either at amortized cost using effective interest method or at fair value through profit or loss. So there are two types of measurement after the initial measurement. And that is through amortized cost using the interest method, effective interest method, and fair value through profit or loss. So how to amortize cost of bonds payable? So this is the amount which the bond liability is measured initially minus the principal repayment plus or minus the cumulative amortization using the effective interest method of any difference between the face amount and present value. Dito napapasok kasi yung amortization ng premium or discount. Okay? Kung face amount lang yan, yun yung full amount and then there's no discount and premium, so madali lang siya. But there's always a discount or premium. Okay? So, now, punta tayo sa issuance of bonds payable. So, this is a sample. On January 1, 2017, an entity is authorized to issue 10-year 12% bonds with face amount of 5 million. So, the face amount of the bonds is 5 million. The nominal rate is 12%. So, the term of the loan is 10 years and the interest is payable at January 1 and July 1. So, meaning that is semi-annually. Okay, consisting of every 6 months. So consisting of 5,000 units of 1,000 face amount. The bonds are sold at face amount to an underwriter. So the underwriter, it could be bank or the investment institution. So what will be the entry here? Debit cash, which is 5 million, and credit bonds payable, 5 million. Okay, so the issuance of bonds here is at a premium. Okay, so an entity here, on the second example, it will be at a premium. So an entity issued bonds with face amount of 5 million at 105. The quoted price of 105 means 105% of the face amount of the bonds. Thus, the sales price is 5,250,000 computed by multiplying the 105%. So the entry will be debit cash 5,250,000, credit bonds payable 5 million, and then you have credit premium on bonds payable 250,000. Okay, what about issuance? Okay, bonds at a discount. So later I will discuss that. So what will happen to the bond premium? So it means actually that the investor or the buyer is amenable to receive interest that is somewhat less than the nominal or stated rate of interest. Okay, so the nominal rate is the appearing on the face of the bond certificate. And then bond premium is amortized over the life of the bonds and credited to interest expense. Now, let's go to straight line method used for simplicity for amortization. Debit, premium on bonds payable 25,000. Credit, interest expense 25,000. So the 250,000 bond premium is amortized during the term, which is 10 years. So that is 25,000 per year. Now, issuance of bonds at a discount. So if the sales price of the bonds is less than the face amount, the bonds are said to be sold at a discount. So an entity issued bonds with face amount of 5 million at 95. So debit cash, 4,750,000. Debit discount on bonds payable, 250,000. Credit bonds payable, 5 million. Actually, in reality, the discount could be considered as outright loss. The premium is considered as outright gain. Okay? It means that the buyer or investor is not willing to accept simply the nominal rate of interest. Okay? The effective rate is higher than the nominal rate. So tatandaan lang, kung effective rate is higher than the nominal rate, then it is a discount. Baliktarin mo lang, the nominal rate is higher than effective rate, then it's a premium. Napapasali yan sa multiple choice questions. Okay, the bond discount is amortized over the life of the bonds and charge to interest expense. Here, ang ginamit nating example is the straight line amortization method. Okay? Kasi meron pang ibang ways to amortize. There is bond outstanding method. Okay? Usually, they are used in serial bonds. Okay? So how to present the discount and premium? So the discount on bond payable is a deduction from the bond payable. And the premium, then it is an addition to the bond payable. So an entity issued bonds with face amount of 5 million at 95. So how to present it in the balance sheet? Non-current liabilities, bonds payable 5 million. You have a discount of 250,000. So then the value will be 4,750,000. What about the at a discount? Okay, at a premium. So bonds payable 5 million, premium on bonds payable 250,000. So you present it 5,250,000. Now, punta tayo dun sa bond issue cost na na-mention kasi you are using underwriter or there are some other fees like transaction cost directly attributable to the issue of bonds payable. Nandiyan yung printing ng certificates, engraving, legal, accounting fee, registration commission of the agent. So under PFRS 9, bond issue cost shall be deducted from the fair value or issue price of bonds payable, measuring initially the bonds payable. So under the effective interest method, bond issue cost must be lumped with a discount on bonds payable and netted against the premium on bonds payable. So tatandaan, kung effective interest method ang use, then must be lumped with a discount and netted against the premium. However, if bonds are measured at fair value through profit or loss, the bond issue costs are expensed immediately. So, kung ang ginamit mong method ng measurement is fair value through profit and loss, the bond issue costs are expensed immediately. Paki-take note of that. Now, here's a problem. Sample. Okay, so an entity issues 200 at 6% 5-year $5,000 bonds when the prevailing interest rate in the market is 8%. The total face amount of the bonds issued is therefore 1 million. So that is the $5,000 face amount multiplied by 200 bonds. There is an annual cash interest payments of 60,000 and then it will be made at the end of each year. So the payment of interest is annually. The present value of the cash flows associated with this bond issue, discounted at the market rate of 8%, is calculated as follows. So calculate the cash proceeds on issuance of bonds. Okay, so how to do it? Actually, so to make the simple answer to this, so here, you need to calculate the present value of the face amount. Okay, which is here 1 million multiplied by, okay, this is 5 decimal places, 0.68058, that is 680,580, and then present value of cash of the interest 60,000 multiplied by ordinary annuity of 3.99271, which is 239,563. So it's rounded. You add them, so the cash proceeds from the bond issue is 920,143. So it's lesser than the face amount, so that means there is a discount. Okay, because the bonds are issued at a discount, the cash proceeds are less than the face amount. So then the entry will be debit cash at the present value, which is 920,143. Then discount on bonds payable, which is the difference, 79,857. Then credit the bonds payable face amount, 1 million. Okay, so it's a very simple problem. So you can just go back and analyze it. Okay, there's another problem, but I would not go through with it. Okay, so recap. I give you the definition, the measurement, and a sample problem. Okay, so you can make more practice on this because this is always given in the CPAIL. Okay, so if you master this, you will be able to master all other topics involving present value. Okay, so our next topic will be stockholders' equity. So thank you so much for watching the lessons. And please, if you haven't subscribed yet, click the subscribe button below. If you have any comments or questions, you can leave it in this channel, or you can go to my Facebook page, which is Accounting Coach Survival Tips, or at CPA Dreams. So thank you so much. Mabuhay po kayo.